Hey traders, let's take a look at two trades that we took on gold. One last Friday and another one today. So here on the daily time frame, you can see that price has swept buy side liquidity and it has headed downwards. So our bias is bearish. On the 4 hour, before I took my trade, I saw that price has already tapped into the daily bullish fair value gap. So I was expecting price to be bullish to mitigate the 4 hour bearish fair value gap. So going to the 1 hour, since we are going bullish, we should look to mitigate opposing low time frame imbalances, which is this 1 hour bearish fair value gap, right? So going to the 15, right? Going to 15, we can see that after price has swept sell side, right? The price has swept sell side in this, at this internal low and at this swing low. So when price headed upwards, it created a change of character, right, with a body candle close, and it has also mitigated the 1 hour bearish fair value gap in the process, and also created a 15-minute bullish fair value gap, right? So when price retested, okay, to the 5 minute, when price retested, it swept outside liquidity inside of this 15-minute bullish short block, and since there was a 15-minute bearish fair value gap being created, I waited for it to be mitigated first. Right, so as price mitigated it, came down to the 5-minute bullish fair value gap, I entered for a trade. Right, and price took fairly long. Right, so price took around 4 hours. Right, 4 hours 30 minutes to hit my TP. So yeah, you can see that my SL was here, but somehow or rather I wasn't taken out, because probably I set my stop loss way below, right? And I modified it later on, like when price came down here. When I opened my trade, my stop loss was probably below this lows, right? Something like this, below the 50%. And when price keep retesting this area, okay, on the 15-minute time frame, when price retested the 15-minute bearish order block multiple times, right, seen here, I shifted my stop loss higher and higher, right? Because as the trade gets longer and longer, I'm scared it might go against me. So I might as well tighten my stop loss, right, to reduce the losses. So as the trade progresses, I tightened my stop loss. So price eventually came up, and it just tapped into the 4 hour bearish fair value gap, but did not completely mitigate it before dumping all the way down, right? So you can see that on the 4 hour, even though price has already tapped inside the daily, but it's just a minimal touch. So price ultimately was still going bearish. So we could have taken a bearish trade. Yeah, we could have taken a longer time frame and a higher RR bearish trade rather than this short small RR bullish trade, right? So I guess for us to be taking that trade, we would have to wait for a price to sweep sell side inside of this 4 hour bearish fair value gap, very buy side. So price did sweep buy side within these 2 candles, and afterwards, when price does a body candle close below, right, and only 5 minutes actually, because here we can see that it's a really small 15-minute bullish fair value gap, right? Once it gets mitigated on the 5-minute time frame, we can really look for sell positions. So probably like this. Okay, so it came down, probably retraced to this inverse fair value gap, right, on the 3 minutes. You can see that it retraced to the inverse of the fair value gap. So you can target the, yeah, so it actually swept the entire daily bullish fair value gap. So this would have been a 1:6.3. right? As compared to this, which is like 1:4, 1.4. I took the second trade off my phone, and as usual, it didn't work out. So here you can see that as price reacted off the daily bullish parallel gap, right? It came into the 4-hour bearish parallel gap. So I was looking for confirmations on the 15-minute time frame. So as we can see, we got a body candle close with a 15-minute bearish parallel gap right here. So as price retested the 15-minute bearish parallel gap, I entered for a trade straight away, right? And price only went to this area before taking me out. You can see that on the 5 minutes, price did not create a change of character with a body candle close, right? But I was kind of looking at the 1 minute also, right? Because we had a change of character here, right? And there was a 1 minute bearish parallel gap being created. So I was expecting price to hit downwards, okay? But yeah. So in fact, this long wick here was a liquidity sweep, right? And when I was on my phone, I saw that there was a 5-minute bullish parallel gap being created. So I was worried that it could have been a liquidity sweep, but I still held on to my trade and I got stopped out. Right. But looking at this entire trade on my phone, right, you can see that my PC. Right, I can see that actually price was just reacting off a liquidity sweep here below the daily bullish parallel gap. So the bullish narrative is way stronger than the forward bearish parallel gap holding, right? So these 2 weeks here, right, in fact these 2 candles here were in charge of the mitigation of the forward bearish parallel gap, right, in order for us to head upwards. So after the mitigation, price came down to sweep sell side before pumping upwards, right? So that should have been the correct narrative, and not for price to and not for the forward bearish parallel gap to hold, right? Because price just swept a very strong price just swept liquidity below and mitigated a very high time frame daily bullish parallel gap, right? Alright, let's take a look at how we could have entered this bullish trade. So as price reacts off this, right, we will have to wait for the forward bearish parallel gap to be mitigated, right, which it did. Then come down to sweep some sell side inside of this 15-minute bullish order block, right? And we wouldn't expect its bullish parallel gap to hold because it has already been mitigated. So as it comes down, right, you'll head upward to mitigate this 15-minute bearish parallel gap, right? So as it hits up and mitigates it, it comes down, we will be looking for buy entries. So go to the 1 minute, you can see that there's a small change of character here. So okay, you see on the 5 minutes, right, even though there are imbalances, right, like the 5-minute bearish parallel gap, but most likely price is going to head upwards already after sweeping so much liquidity inside of here and below this on the block. So as you can see, right, okay, on the 1 minute, you'll be looking for longs when you break past this candle. Okay, the stop loss will be around here, around 20 pips, because if it hits down any further, then I'm not confident in this trade anymore, right? So yeah, something like this, probably to this area, right, to these equal highs, which will be a 1:9 Alright. So yeah, as you can see, right, if we were to wait for it to be mitigated, okay, let's say wait for it to be mitigated, right, this, okay, then this would be the change of character, right? So after this break, there will be a creation of a parallel gap where we technically could have entered here, right? But we would be in significant drawdown, right? So I guess entering the trade here is gives us the best RR, right? Because price has already swept so much sell side below of this 15-minute bullish order block, and below this 15 and inside below this 15-minute bullish order block. So see, price gave us a really hard time to enter around this area, right? Because and it is also less RR, right? So you have to take note of how we enter also.